Mike Tedeschi, Wealth Management Advisor, Perspective Wealth Planning with this week's market breakdown video. We're going to take a look at the U.S. dollar, the four major U.S. indexes, commodities, and today we're also going to take a look in at the breadth readings that we've seen here, especially in on the Nasdaq over the last week or so. We've had a really nice thrust and what that has historically meant for us when we see this kind of price action in the Nasdaq. So let's start with the S&P 500. Look, not a whole lot to change or say about this since last week. We're still right up here near those all-time highs. A slight minor pullback in the beginning portion of the week, holding onto that breakout line. We still have higher lows that are in place, and we still have higher highs that are in place. We just continue to grind higher. Nothing bearish about this chart at all. We jump in and we take a look at the Nasdaq. Very similar. We know we had that nice breakout there at the end of June. We've continued to push forward from there. We also have higher highs and higher lows in play. Just recently made a new all-time high. Again, a very solid looking chart. Nothing really bearish to look at there. The Dow is not as strong. We've talked about this here over the last couple of months. But look, we still have higher lows in place. The thing is the highs are marginal highs. It's not the same kind of angle of ascent that we see out of the other indexes. So you have the Dow kind of like this, whereas the S&P 500 would be on this chart would be more like this. So we're not getting that real big push. In reality, we really haven't accomplished much of anything since May. We have a little bit of price action above it, and we have basically this range. I would say the Dow, even though we are making higher highs and higher lows, we're really more so trapped in between 33,000 and 35,500. I'm really looking for that next big move either direction. Because of the way the rest of the indexes look, we're definitely thinking it's probably going to be towards the upside. Now, of course, that really has a lot to do with what goes on in the Russell. Now, the Russell hasn't accomplished anything since February, right? We had an incredible push at the end of last year. I've said the same thing over and over again. Right here's the middle of the range. That's right where we're at, about that 2250 level. A move above 2360 is an easy breakout and a very clean and clear one at that. And underneath 2100 would be a very clean and clear breakdown. In between here, in this zone, it's no man's land. As we've seen, we haven't really accomplished much of anything. We get up to the top of the range, it's sold off. We get to the bottom of the range, it's bought up. It's just trading in a nice sideways zone, which happens after you have some incredible moves where you get that nice digestion sideways. It's perfectly normal. It's perfectly healthy. We just have to pay attention to which way this resolves. Now, next, we want to take a look at the U.S. dollar. The U.S. dollar, as you can see, right, we're still in that long-term downtrend here over the last year or two. When we back this chart up, we look at it on a monthly time frame. We've talked about the importance of that 90 zone and how really, really key that is. And over the last month or so, you can see the lines that I've drawn on the chart. We technically have higher lows and we have higher highs. So we have a small uptrend here over the last couple of months in the context of this bigger picture. We know that we've got resistance right up here, all the way back up into this zone. So really, you can't say that the dollar has turned the direction around and is headed back up really until we take this out, which is from about September of last year, and that'd be about that 94.5 zone. This is still just kind of a messy chart. You kind of have a potential, like W. You could look at this as a double bottom. And then you have this resistance right here. So the dollar is just a messy chart when we look at it over the course of a year. Over the last month or two, again, we've had a little bit of an uptrend. But the big picture on this is still we don't really have a clear understanding of where that next direction is going to be because we are just kind of in this messy range. So over 94 definitely changes the picture, and underneath like 90 definitely changes the picture. In between those two zones, it's kind of just that sideways messy range. Now, when we look at commodities in and of themselves, we started running into some sideways action and some pullbacks across the space in a lot of them. Here is, I'm going to actually back this up to a weekly time frame so that you guys can see this. Here's that chart of oil. We really do have kind of support back down here between 60 and 63. You can see the importance of that zone going all the way back to 2018. Then you get that resistance up around that 75 to 77 level. And we're just bouncing in between those here over the last couple of months. So we do not have a resolution here. But if you look at this again on a weekly time frame, we do have higher lows. I mean, this pullback did put in a higher low, but we also on the weekly time frame have lower highs here over the last month or two. So really, you can kind of look at this as a flag We came from down below. Could this be that bull frag where we get that break and we push higher? Or is this sort of that topping, action? We don't really have a clear answer here from the chart. All we know is we like it over 77. We don't like it underneath 60 in between that range. Again, it's kind of a tough area to talk about. Now, nat gas is not something we usually pull up here. It's it's a higher volatility commodity. Definitely makes some really, really large moves. Let me back this out and look at it on a monthly time frame. The reason I wanted to show this is we are trading, and we did trade really at the last time we traded up at this zone was back in 2014. So, over that 4.5 handle, really is kind of wide open here. We've really spent basically from 2009 on until about this point in time pretty much underneath of this level. There's a month or two there in 2010 where we were above it. Over $6, the nat gas market really changes. Okay, we are right into the bottom portion of that range where we could continue to see that kind of explosive move here to the upside. If we can break through this, this is major long-term resistance. That would be a fundamental change inside this market that we haven't seen take place in the last decade. So it is worth pointing out. It's definitely one of the more interesting commodity charts that we take a look at in this week. Now, gold is just continuing to fluctuate right around that 1800 psychological level. We'll get a little bit above it. We'll fall back below it. We held that major low down here at 1675, was immediately rejected back off of it. But gold hasn't accomplished anything after that bounce, right? We came right back to where we were from before it fell. We weren't able to make any move to the upside. We still, over the last year, we have lower highs. When we take a look at this chart, all right, we still have those lower highs that are in place, and we have lower lows until here, and then we start having higher lows. This low is actually higher than this one, which is higher than this one. So, I mean, they're marginal. I really would call this more of a flat bottom here, where they're all kind of at the same price point. So we have stopped making lower lows. We haven't started making higher highs. What does that mean? We don't have a clear trend in either direction here over the last 6 months, right? Not up nor down. It's a sideways mess, and that's kind of what we're seeing in a lot of these commodities, right? Here's silver. Pulls right back down to 22, holds that level, can't get back over 25. It is in a downtrend over the last couple of months, but in the context of, again, a sideways range for more than a year. So no clarity in there. Platinum just basically bouncing between 960 and 1020 over and over again for the last month, right? We can't get back up over that 1030, which would kind of break this downward channel in place since April, but we're also not making lower lows anymore in this. So again, just kind of that sideways mess. Palladium, we came all the way back into that 2500. We talked about the importance of that level. We are back down at that 2200 zone with a big sell-off here over the last couple of sessions. This breaks below that 2200. The strongest chart out of the precious metal space as essentially would be broken at this point in time. Doesn't mean the rest of them will follow it, but this is not what you wanted to see as a palladium bull, us lose 2200. It hasn't happened yet, so it's still holding that support zone. Really kind of gets that support zone, kind of falls down to about 2120, and then under that we really don't run into any sort of support until that 1800 to like 1700 zone, all the way back down here. So it'll be really interesting to watch what happens right here. So far that's held for a year. There's no reason to think that this support is going to break, but if it does, that does change the context of this chart here. All right, now let's start taking a look in at our breadth readings. Now, we have spent a lot of time looking at the Nasdaq McCullough Summation Index, and we have talked about this 300 level on the chart being super, super important. Remember, this chart here goes all the way back to 2019, okay? So there is that 300 level in on the chart. We can see here, it held, it held, it held, it failed, and obviously in here, we dove below it and then came right back up above it. But the outside of the major sell-off, 300 has been that important level to watch. And we had, over the last month, we fell below that. We talked about how the indexes were making new highs, but not a whole lot of stocks were participating in it, and we needed to see whether that breadth reading was going to change and turn back up, or if the indexes were going to start to follow what we were seeing underneath the surface and kind of roll over. We very clearly here over the last month have turned this around and have headed back up. And we're going to look at this in another way in another table here in just a second. We got two charts that we're taking a look at here on this. Over the past 10 days, it averaged more than 60% of names on the Nasdaq advanced. And more impressively than that, 65% of volume flowed into advancing issues on each day. We saw a big thrust over the last 10 days where more than 60% of the names were going up and more than 65% of the volume was flowing into it. When we historically take a look at the Nasdaq, when we have numbers like this, it has been very positive. Buying thrusts are a sign of robust demand. And we have a lot of signals going all the way back to the 1970s. And we can look out 1 month later, the Nasdaq was positive 100% of the time with this reading. 2 months out, 90% of the time. 3 months, almost 80. 6 months, 80. And a year later, 84% of the time. This kind of volume thrust and up issues inside the Nasdaq has historically been a very, very positive sign. All right. And if you look, here's what's very, very interesting. We did not get any of those readings at the end of the dot-com bubble because it wasn't broad-based, right? It was very focused in on a select number of names that kind of went out of control. This was a broad-based thrust across all the names on the Nasdaq. That is a very good sign for us. Again, the indexes are at all-time highs outside of the Russell, which is almost there and very well could break out of that range it's been trading in for a while. The technicals of this market look really, really good. Look, if market rolls over, we start making lower lows and things change, then we will change our stance. But as it sits right now, things still look very, very good technically across the board. And readings like this just kind of cement that idea that underneath the surface, things are all starting to work together and we may be in for a nice run towards the end of the year. We'll continue to stay tuned. As always, if you guys have any questions, feel free to reach out to me. You can reach me at mtedeschi@perspectivewealthplanning.com or shoot me a call over at 814-580-9881. I look forward to talking to you guys, and as always, I'll see you next week. Take care.